So welcome to chapter 2. In this chapter, we will begin working with QuickBooks Online, and you will create your own company called Math Revealed. You'll be importing files into your new QuickBooks Online company. One of those files will be a chart of accounts. So I think it would be good to give a quick refresher of accounting, how it works, and the beauty of this thing called dual accounting. First, I want to remind you that accounting is commonly referred to as the language of business. So regardless of what role you plan on playing in a business, whether you are in the business of education, medicine, technology, politics, whatever, each one of these arenas rely on accounting records to help inform decisions about the company or the organization. So accounting records are separated into accounts. Accounts are used to track activity related to specific types of transactions. For example, the use and receipt of cash, the payment of salaries, the use of advertising expenses, the money customers owe and eventually pay or do not pay. These accounts are classified into 6 broad categories: assets, which is what the company owns; liabilities, what the company owes; revenue, which is what is earned by the company; expenses, what it costs to run the business. The 5th one is capital, what is contributed to the business by owners. And the 6th is dividends, and that is what is paid to the owners from the business. Now, I know I went through that quickly, but it is really important that you understand the difference between these categories. For all the artificial intelligence that QuickBooks Online has, it's only as smart as we tell it to be. You'll see in this chapter that when you're setting up accounts, this is one of the questions you'll have to answer: is which one of these 6 categories does it fall into? Asset, liability, revenue, expense, capital, or dividend? The other concept I will touch on really briefly is dual entry accounting. This is the earth-shattering theory that every transaction affects at least 2 accounts. Now, QuickBooks Online will make sure that this happens, right? That's why this is so cool. If you tell QuickBooks that a customer paid its bill, then QuickBooks knows that it will increase cash and decrease accounts receivable. See, it affects 2 accounts. If you tell QuickBooks Online that you received inventory on account, then it will know that inventory is going up and accounts payable is also going up. 2 accounts. Awesome. This all predicates, again, on you setting up the accounts correctly. But once that is done, then you are golden. And the last concept I will want to touch is the 4 basic financial statements. When you get to the end of this chapter, you'll be asked to create 2 of those financial statements. One is the income statement, or as it's known in QuickBooks Online, the profit and loss statement, and the other is the balance sheet. Now, the income statement is going to tell you how well a company is performing. In other words, are they making money, right? Which is a good measure of success. The balance sheet tells you the financial position of the company. In other words, what do they own and what do they owe and what do they really own, right? So obviously you will find on the assets and liabilities, the balance sheet will show the assets and the liabilities as well as capital. On the profit and loss or the income statement, you're going to find revenue, expenses, which is your profit, the measure of the company. And then that's going to be what's paid to the owners, which is dividends, which then will get subtracted from your profits. So I know that is a lot, but if you feel a little bit uneasy, check out some of the tutorial videos available within this course, or you can always find even better ones on YouTube. For all the good that QuickBooks Online is, it is not a replacement for an accounting student with a solid understanding of how it all works. Enjoy the chapter.